Wednesday, January 11th, Stan Ehrlich, market analysis. And I always start out with the S&P and the indexes, but this morning I'm going to show you something else. It's going to be the ER3 basic signal and a really good trade that's involved. I'm involved in at the moment. The system is involved in at the moment. But here we go with the S&P 500. Spider, SPY, is challenging the highs of 2 days ago, which is the high for the last 3 weeks or so. There is a small gap to close, and you need to get up to 96.30, I believe it is, 396.31 to close the gap. So I will not be surprised, as I've said for several days now, if we can get up to 96 approximately, and that should be it. I'm not expecting any further strength. I'm not even sure we're going to get there. But that gap is, gaps are like a black hole in space. They tend to suck the price action into it. My little analogy over the years. And gaps are almost always closed. And I do say that fairly often. And it's very true. So no surprise if we get up to 96.31 or maybe a little higher. But you get the message. But no follow through of any significance. I do not expect a close above our major bear trend line for the life of this bear market, which goes all the way back to the beginning of last year, very specifically January 4th of 2022. That was the top of the market. You can see we got a sell signal just before it topped out. Another great sell signal when it was establishing its major long-term bear trend line, which was tested later on in August, and it stopped cold right there. And we did leave an old gap behind, so there's still something there. But that's at 19, and that could change the whole picture. So I'm not expecting 400s, period, especially above 410. That's the double top. That's a test of the next trend line again, and should cause more of a move down. Now, my expectation is that there's going to be a low of some significance around the last 2 weeks of January, maybe the first week of February, and that's pretty much right around the corner. So I think this rally is about to peter out. We do have a small gap to close below today's low relative to yesterday's high. Let's take a quick peek at the 1 minute spider, and you can see that as of yesterday's strong close, we opened higher this morning, popped up, tried to close and did close some of the gap, but there's still some left, and then have made new highs recently. By the way, it's 9:49 California time at the moment, and that means we've got plenty of time for the end of the day. This is approximately the middle of the day. So at 9:30, 393 and a quarter, we might be very, very close to the rally high. I would not get aggressive about going short at the moment, but that's my mindset. Let's take a look at the DIA. The DIA is approaching its high of 2 days ago also. There's no gap to close on the DIA. But the difference here is it has already broken weeks ago the major bear trend line and come back down on top of that trend line and then start to rally back up again. That kind of activity relative to trend lines is usually in a bull market. And I don't think that's the case yet. I am expecting another maybe test of the trend line, a low lower than the last few weeks by a modest amount, again, around the end of the month or maybe the first week of next month. And let's look at the QQQs. Here we have a new high, clearly by a minor amount, and not yet at resistance where we are right now on the S&P 500. Although it's not fantastic resistance, it's some resistance. That resistance is still a little bit higher in the QQQs, so I'm allowing for a little more strength in the Qs, which is allowing for a little more strength in the S&P, in which case you're going to get maybe that gap closure in the S&P at the same time that the DIA tops out, QQQ tops out, and as well the DIA. So we'll see what happens. I do think we're going to start turning down this week. It's Wednesday, so it didn't happen on Monday or Tuesday, and today's a test of the highs or a new high for the three indexes. So let's go look at something I haven't shown you before. This is, remember, the ER is an automated trading system, ER Signals. And if you need any more information, info@ersignals.com, email me, info@ersignals.com. And the automated trading system is meant to pick, developed over a decade, to pick tops and bottoms in markets to the day that they happen. Now, obviously, I don't get in at the highest high or lowest low for a significant, huge rally and break, et cetera, all the time. I do frequently, but there are plenty of mistakes. That's why we use a trailing stop, money management, period. So let's take a look at this one. This happens to be ABNB, and we got a buy signal a few days ago on the daily chart on the left here, and that buy signal was on the 6th of January. And that's why the latter part of the day on the 6th of January in the middle of your screen is green, because that part of the price action is producing a bullish engulfing within our time limits and oversold condition. It was a few days earlier, but that amount of time is something I've learned to handle, and it's in the code. Of course, this is all automated. We don't, with ER3, try to get into the trade until the next day or a couple of days later for a certain amount of time. So in this particular case, the green line always represents the bid on a buy signal. And yesterday, early in the day, the market dropped off a little bit more, hit our bid, and we got long. And it went up, it went down, it went up, it went down. It was a little profit, a little loss. And then finally, at the end of the day, it was a little profit, no big deal. You notice the yellow line is our trailing stop. So as prices move, and not necessarily based on price movement and or time, but a variety of other factors, we raise for long positions our trailing stop, risking less until finally it locks in a profit. And I use the word locks in loosely. If it was filled at the stop price, that would be true, but there's no guarantee that that happens. Now, I was a broker 35 years. I haven't been, don't have a broker's license for my last 15, 20. So I can say that. Anyway, this morning, the market opens a little bit higher and starts to run up. Notice our trailing stop, the yellow line. We call it an STS, smart trailing stop, starts to quote unquote lock in a profit, and it's still doing it now. This has rallied to a profit of approximately $630 almost at the current quote. And our stop is locking in $4.82 at the moment. And the stop is located $1.46 from the current quote. So we've got that elbow room, and the stop is at 92.51. All of this is calculated and displayed automatically. So this is a great trade, and most of it, by far and away, is this morning's very good strength on this particular symbol. That's an ER3 overnight trade. We have ER1 scalp and overnight, which would have done very nicely, profitable. And we have ER3 scalp also, total of 4 different strategies based on 2 different models, based on what I've learned over 52 years, futures charts. Okay, we got a sell signal a few days ago in corn, and here we go, big screen, full screen. And we have a little trading range developing for a few days. Because of the sell signal, I still think this tends to want to go down and challenge the low for the move and make new lows. But I started talking about this yesterday. We had a bullish engulfing. Now it's not an ER buy signal. We're lacking the oversold situation on a custom relative strength index. And I learned RSI from Wells Wilder himself. And George Lane taught me stochastics, blah, 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 blah. So an outside up day is normally a buy signal, oversold or not. And so far, it's up just a tiny bit today. I would say if it makes a closing price above yesterday's high, we may have turned a corner, and that could be the last week, a last shoulder low on a head and shoulder bottom. We got a green buy signal on the first shoulder low, and it rallied modestly, not really very much, and mostly sideways, but it's a low. Then we have a buy signal also on the head of the formation, the bullish bottom, a sell signal just before the damn thing comes down for 2 days very, very nicely and may be forming the last shoulder low. Watch for strength, trade it like you should, head and shoulders, if you know how. If we start closing below 647, it's going to start to damage the formation, and that could be very bearish, probably down into the 590s, low 590s. Next chart. I won't spend that much time on every one of them. Friendly, bullish. A sell signal did cause the market to drop for 3 days. There was some money in that. Nothing fantastic. Well, I'm now flat and friendly, probably looking for another sell signal. Next, bean oil. We caught the bottom a month ago. This market is starting to go sideways a little bit for a few days. I'd like to see it turn back up again and start to make new highs. Right now, I'm neutral, but our last signal was smack dab on the bottom. That's why the ER signal technique strategy was built. Next, live cattle. Bullish. And again, that's kind of a double pun. Cattle. Anyway, platinum. Ooh, a bearish engulfing today. This is a brand new sell signal at the moment. The assumption is that we're going to close lower than the previous day's close. That will maintain a red bearish engulfing. We were overbought recently enough, part of the code. You can see it started topping out when the prices turned yellow in an overbought condition. And today it tries to make, and probably did make by a few ticks, a new high for the trend. But it couldn't hold. And all of a sudden, we're now lower than not only yesterday, but the day before as well. And we have a bearish engulfing and an ER sell signal. So what can I say? Tierra del Fuego, head south. Looks like this is topping out today on platinum. Next, little oversold. I wouldn't be chasing it down. Obviously bearish, but it needs a rally. Then I think it can make new lows again in natural gas. Next, high-grade copper. Overbought. Don't chase the market up, especially when it's getting overbought. I'm looking for a downside retracement a little bit below 4.00000, and then I would consider being a buyer, especially if I happen to get a green bullish engulfing like the one that we had on September 28th. Or a sell signal that we had on March 7th, which were profound turning points. There's a sell signal that didn't work very well, just to point out some of the ones, and they're stopped out right away. We usually use the extreme of the reversal day as our stop area. So the risks aren't that big. When they work great frequently. When they don't work, we get stopped out. We have a little loss. It's all automated. There's nothing for you to do to sit back with a cold beer. Next, wheat. Of course, we got the high. I mentioned it every time we come across the wheat chart at the beginning of the war. And that was spectacular. Nothing lately. Bearish, looking for lower lows. I wouldn't chase it. Yeah, this could be a decent area to go short. Next chart, and that was wheat. Next chart is live hogs. Oversold. Don't chase it down. Wait for a little bounce, probably in the next day or two. But it looks like this is breaking some major bull trend lines. Probably going to slip off some more below 75, I would guess. Maybe the low 70s. Next, coffee. Slam dunk. Oversold now for 2 days. Don't go running after it. It is a downside breakout. So oversold conditions are typical in downside breakouts. We should be able to bounce back up a little bit above 150, go short in that ballpark price level in the next few days. That's coffee. Next, OJ. Possible top formation building. Go into more detail later. Maybe you can guess what I'm looking at. And I am neutral for the moment. But if it starts to slip, make new lows for a few days to a week or so, that could be the beginning of a downside breakout, and I have a lot to say about that if it starts to slip. Right now, I'm not sure which. Soybeans, neutral. Heating oil, neutral. E-mini, you know what I think about the E-mini. It is a stock market index, but it's also a futures contract. So October 13th was the October lows in hellishly great fashion this year. I wasn't expecting it to be so huge and profound and blatantly obvious when I started talking about it back in September, August and September, well before October. But that's what we got. Gigantic bullish engulfing ER buy signal and at least a 2-month rally. We'll see how far this rally that we are in right now can carry. Next, sugar, neutral. Next, bonds. I think interest rate futures are developing a long-term bottom. I can't get put my I can't come to a conclusion exactly what is developing. I don't expect any big moves up or down. I think the downside is a little bit more likely. We might get a little bit below 123, but still, I'm not necessarily looking for a new low for the whole trend. It could get tested, something in the 19s, but I favor something a little higher for the low in the next month or two. And the same thing goes for the 10-year notes, just different numbers. Next, we're looking at gold overbought, and oh, hey, we have almost an outside down day, bearish engulfing, not quite though. Look at the current quote, 1877.5, and it just might turn red if it gets lower than yesterday's close. Yesterday's close was 1876.5. Is that right? Did I get the right number? 1876.5, and we're at 1877.4. So this could turn red anytime it gets below the low of the closing price of yesterday. Real time, if we've got enough time left. That would be a major sell signal. I don't like it being overbought, and I don't like the outside trading range that we have. It's not a official ER sell signal. We're going to find out whether it turns into one tomorrow, but keep your eye out on the close on gold if it closes lower than yesterday. Then I've got a sell signal completed. Very interesting. Next chart. Silver, bearish engulfing, but not overbought at all. Nevertheless, bearish engulfings, I've said before, are normally bearish by themselves. So I'm starting to think silver is going to join maybe gold, and both now are showing me signs that they're trying to turn down. Both gold and silver. Interesting. Next, crude oil. Neutral to bearish. Might have a little bit more strength, but it looks like the trend is still persisting to the downside. Next, exactly the opposite on soybean meal. The trend is up. We're not overbought. We're close to the highs. We've already had a little test of support. I think we're going to see new highs very soon. Next, corn, and this is where we started. What's going on with the spider? I think we're making new highs. Yes, we are. We are now slightly above day before yesterday. This is the new high for this particular rally, 393.60 something. And this is still the possibility of getting up to 396.31, remember. That closes the gap. So almost exactly 3 more points, and we're up 3 points, 0.07 right now. So if we're up 6 points on the day, that just might be it. All right, I've covered the ER3 and the this trade that's coming along fantastically. It just made new highs a few minutes ago. Our trailing stop is coming up and up and up underneath the market. And as it gets higher and higher, by the way, our stop takes into consideration a variety of features. So it clamps down on current quotes. The faster the market goes up, in this case with a long ER position, the faster the rate at which the stop moves. So this is looking great. This is one of the best trades in a while. Granted, I don't like showing you the bad ones, of course, but they're there. Okay, excellent. You have a great trading day. Talk to you tomorrow.